Okay, Bismillahirrahmanirrahim. Before we move further, I would like to explain to you about joint products. So joint products are two or more products produced from the same processing operation. So based on CIMA definition, two or more products separated in the cost of processing, each having a sufficiently high saleable value to merit recognition as a main product. So they are from the same processing operation, and each of these products will have high saleable value. And then it's a group of individual products which are simultaneously produced from the same basic material and passes through a common production process or a series of production processes, and each product has a significant sales value. So that is joint products. Joint products are products manufactured with real economic importance, and none of the product can be treated as the main product. So for example, in an industry of dairy product, so you have the raw material. So you have the raw material, that is your milk, and then you will have joint products. At the end of the process, you will have cream, or you will have butter, or you will have cheese. So these three products are the joint product because they are processed from the same processing operation. For example, another example, in an oil refining industry, so you process the crude oil from, that is your raw material, and then you have the joint product, for example, the gasoline, the fuel oil, the jet oil, the lubricant. These are all your joint product. So a distinguishing feature of the production of joint product is that the products are not identifiable as different individual products until it reaches a specific point in the production process, and that point is known as the split off point or the point of separation. Thus, before the split off point, cost cannot be traced to particular products. Just look at this example. You are in the oil refining industry. Okay, from the crude oil, you will process your raw material, that is your crude petroleum, and then you will incur cost. The output that you get, you will have gasoline, you will have fuel oil, you will have lubricant, you will have three products. So these three products are known as your joint products. Okay, you have three joint products: gasoline, fuel oil, and lubricant. Up to this point, that means until you reaches this point, you incur cost. That cost that you incur is called as the joint cost. They undergo the same common production process until you get this item. Remember, previously we mentioned that joint product, two or more products. In this case, we have three products separated in the cost of processing, each having a sufficiently high saleable value. Okay, these are all your main products, and they are simultaneously produced from the same basic material. They pass through the common production process. That's why you have the common cost, okay, or your joint cost, okay, until each having a high saleable value. Okay, so this one, you will have this crude petroleum that you process from the common production process. They undergo the same production process until a split off point, then only you get the three joint products. So the cost that you incur here will be will be termed as your joint cost, or sometimes certain books they use the word common cost. So this one is your common cost. So what's the issue? You can sell, for example, you can sell the product here for example, you can sell the product here at this point, or you want to decide whether you want to further process that item until you got the final sale value here. So the question is, or the decision that you want to make is whether you want to sell your product at its current state, or you want to further process and sell at a higher sales value. Previously, we have looked into a single product. Now we have more than one product, that is called the joint product. So you have joint product, and then you want to make that decision. So this is about the joint product or joint cost.